There's a hint today that business and consumer confidence is in better shape than many would have you believe. The Westpac Melbourne Institute Consumer Sentiment Survey showed a 6.2% rebound to go to its highest level in 20 months. It also shows what bigger tax cuts and the talk of rate cuts this year will do for the community's mojo. Well, Matthew Hassan is a senior economist at Westpac, which released those numbers, and he joins me now. Matt, always good to have you on the program. It's amazing. There's actually no interest rate cuts. There are actually no tax cuts being handed out yet, and yet the good vibes have happened.
Yeah, it goes to show a bit of whiff of good news does a lot for sentiment. I think also in the mix here is some clearer signs that we're starting to get on top of inflation. So, yeah, promising rise. To be clear, it's still a weak read. It's kind of, over the last couple of years, it looks a lot better, but we're still at 86, so we're well below the 100 line and still in pessimism. But we seem to have broken out of that sort of 77 to low 80s range that we've been stuck in. The two components that really moved was buyer sentiment. I think starting to tap into that moderating inflation story and expectations for the year ahead. So interest rate cuts may be starting to come back onto the table. Tax cuts are definitely slated, and we saw the broadening of the stage 3 tax cuts definitely play through to middle and lower income expectations for family finances.
So the one thing about this, when you come to this is always a bit of a guide as to retail expenditure. Now, the question is whether the read as it is now leads into improved retail sentiment. I mean, you saw Godfrey's collapse. You've seen a range of different businesses under some pressure in that retail space. More insolvencies expected in that area. The question is whether it's enough to get the whole retail sector out of the mire.
Look, it's probably not enough to snap us out of this weak patch. A lot of the current measures around family finances are still very weak, and we're coming from that very weak starting point. But I think it's the detail here that's really promising. You know, if this is the beginning of a recovery, it's showing those signs that inflation's easing. If we start to get more confidence from the RBA that inflation's under control and the way forward for rate cuts may start to look clearer. I think of real interest was the swings over the course of the survey week. So 86 for the whole survey, but amongst those surveyed prior to the RBA decision, it was 94.
Right.
So I think there's a bit of hope that we would have got a more positive signal or messaging from the RBA. People weren't expecting a rate cut, but perhaps some more positive messaging around inflation coming under control, around scope for cuts down the line. So I think that's telling us that if and when that message does come out, we should post a pretty good rally in sentiment. So I think there's some positive early signs here. There's light at the end of the tunnel. But for the here and now, we're not quite out of the woods as far as...
Okay, so there's one thing that has been out there as a headline for a long time, cost of living crisis. Yep. I put it to you with those sentiment surveys that the crisis is not as great as what many people suggest it is. Yes, it's tight, but while people have got jobs, there's no crisis. It just hurts and people don't like it.
I don't know if I'd follow that line of argument. I actually think there may be a little bit of a false dawn around this. So I think the messaging around inflation coming under control doesn't mean prices are going to go back to where they were 2 years ago. And it's going to take a while to work through this cost of living pressures. Even if we have wages growth at 4% and inflation at 3%, it's going to take several years to get back to where we were prior. I think the cost of living crisis is pretty genuine. In some segments, I'll take your point that I think there are some segments where it's watch what I do, not what I say.
Yes.
And there's definitely some segments that are still spending pretty freely where they've got access to those pandemic savings, for example. But I think what we're seeing more and more, particularly around younger age groups, more sort of stressed finances, there is a genuine weakness around spending, and incomes have gone backwards materially.
And very quickly, that would also feed into the employment prospects for people as well. That's the key also.
Yeah, that's true. So I think certainly around the labour market, they're still very confident. They're not fearing job loss imminently, and that's been a really important anchor over the last couple of years. And for those that have the wherewithal, that's encouraged them to continue spending. They haven't had to go really aggressively into belt tightening. So I think the labour market is still holding together quite nicely. For the RBA, it's still looking like a soft landing.
Yeah, that's exactly right. I've got to say, Matt Hassan, always good to get your input, and many thanks for your time today.